Jim, let's talk about First Data, okay? In the sort of private equity sphere, it is considered to be, if this deal goes through, which many are skeptical it won't, it could serve as a litmus test of all the other pending deals in the private equity world. What do you think?
Okay, I think that people don't understand how Wall Street tends to, when they're really in trouble, backs to the wall, they cut the price of whatever merchandise it is that's stuck. Whether it be IPOs, they start doing it much below where the market really wants. You get First Data done, and you take a big loss in First Data. That's part of what these firms do, is they take big losses. Take a big loss in that, then people will say, okay, well listen, they Goldman or whoever it is that's pricing it gave us a big deal on First Data. Let's go in and let's give them Texas Utilities. So now you get First Data done and you get Texas Utilities done. Then suddenly there's Alltel out there, and people see that the bonds traded up after First Data. They'll trade up, particularly because the Treasury, the 10-year's at 4.5. So then you say, well, listen, maybe I'll take some Alltel and make some money. Next thing you know, you've got 3 big deals done, and the pipe is looking like it's good again. If the Fed cuts, then you blow all the stuff out. If the Fed doesn't cut, which suddenly became that's the new mantra I'm hearing, the Fed's not going to cut. Frankly, I think that the Fed is in panic mode, and you get 2 or 3 more bad pieces of news, like a lower payroll number on Friday, and they had to cut. So I want to take it off the table. The people who have been saying they don't have to cut were the people who missed the discount cut. They were the people who thought that interest rates were going to 5.5. That whole camp has been so wrong for so long, I'm surprised they say anything.
So back to the private equity question. In terms of who's going to make it, who's not. For those who think, look, the liquidity crisis, the credit crunch is going to halt these deals. You're saying really, it's not going to halt the deals, but the prices are going to come down.
Right. So I mean, if you a bond can be priced at 92, 93. Goldman takes a big. I'm using Goldman as the generic one. Takes a big beating, and then it's on to the next. I mean, I think people don't understand that the pastiche of these companies' earnings, unless they're Lehman Brothers, which is really linked to mortgages, or Bear Stearns, is one of it's a mosaic. And at any given time, one part of the mosaic's not going to do well, and another part is going to do well. And people have to recognize that's why their multiples are 8. It's not like Goldman's multiple is 12; it's at 8. So if it can do the $22 that I expect, then you look at the stock and you think, geez, it should be bought.
Okay.
It should be bought.
So private equity here to stay, at least for the rest of the year.
Absolutely.
All right, thanks a lot, Jim Cramer.
Okay.